Okay, that price drop turned out to be just a dip, and wow, that was a close one. I guess none of us have to be embarrassed. We bought all that gold. So we hear people say, buy the dip. Now, it's probably burned into our brains at this point and kind of feels meaningless, but last week we got one, and it lasted just long enough to say the words, maybe make a purchase or two, before it disappeared. Now, the interesting part is that traders are actually buying the dip too. It's not just person A telling person B and C what they already want to hear. It's not preaching to the choir. So outside of this club, well, we continue to see inflows every time the price of gold drops. Now, maybe you thought that that should be obvious, but traders don't think that way. They're not perpetual buyers. Just look at last year. Traders don't have to deal with premiums or selling friction. They don't have to pick up all their metals and run to the store. If they think they're going to lose money, well, all they have to do is tap a few buttons and they're out. So what does all this tell us about the price going forward? Well, I think it tells us a few things. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. Now, the reason that any of us might care what traders are up to is that obviously it affects price. And then because the traders affect the price, we can get some clues on what they're going to do, which gives us some clues on what price will do. So if we look at the CME FedWatch tool just as an example, that tells us that traders don't expect a rate cut now until June. So that's a clue. We've seen that push back twice. Well, if traders don't see a rate cut coming until the second half of the year, but they're still buying gold each time it pulls back in price, well, that tells us even more. It tells us there's still a very high confidence level in those higher prices. So we don't have to give them all the credit. I just think it's important to consider charts and trader sentiment, but not necessarily to follow it. I think that it helps us stay informed, it lets us know what's happening, and it lets us know, at least gives us some clues as to where things might go. Now, really what we're trying to do here is come up with likely possibilities. Like right now, we're ahead of the 50-day EMA again, and you'll see analysts say things like, the bulls have the near-term advantage. Well, that's the kind of thing that might be useful if you're a trader, but there are more basic clues for those of us who aren't, those of us not buying paper. And seeing traders continue to get involved with each pullback, well, that's one of those clues. So technical analyses right now are pointing to higher prices. And that's coming on two fronts, both the charts and the volume. Now, last year, we actually saw big outflows in gold ETFs. And prices continue to climb. Now, I think we need to stick a pin in that, but what it tells us is that there's more to pay attention to than just the current price, or the words from the perpetual pumpers. Now, all that is really just to say that buying the dip actually does make sense. Now, this isn't going to be something that we can all pull off. We won't all have the patience or the budget to buy one of these coins every time the price pulls back. But if we were to look back through the past few years just to get a sense of how often these pullbacks correct, well, it's 100% of the time. I guess technically we're below the all-time high at the moment, but if we just look back at the last few years, we'd see that the pullbacks have actually been very short-lived. Now, one thing that I should say here is that these charts only show price, and price is a little bit different than trading volume. Really, I don't want to dive into trading charts here, but if we only looked at price, we would say that maybe the price bounce today is coming from the US dollar index performance being down, or China dropping key interest rates that boost mortgage lending. Both of those things are going to send the price of gold up, but we'd only have part of the story. Now, the inflows or the buying volume on price pullbacks are just as interesting, even if you don't dive into actual trading volume, just knowing. Are traders buying? Are there net inflows, or are they selling net outflows? I mentioned that partially because we saw big outflows in gold last year, but it didn't really affect price. And that tells you that there is some kind of outbalanced positive factor happening, like central bank buying. That kept the prices high despite what traders were doing. So if you only pay attention to one of those angles, it's very easy to get the wrong impression. Just take a look at last year toward the end of the year with all of those outflows. It looked like the price of gold was about to drop, but it didn't. So how do we know it's coming? Well, We don't. We couldn't have predicted the December rally in November because we got that new inflation data that kicked that rally off, but we have been able to watch the charts. We've been able to check the CME FedWatch tool. That lets us know what traders are thinking, what they're planning, and we've been able to pay attention to whether or not traders are buying these dips. So it's telling us two things. First, it's telling us that gold is not on the edge of a price cliff. It's not about to fall off. And two, it tells us that we should expect some kind of jump in price starting in June of this year. Now, are there any guarantees? Nope, but it's better than 50-50. Well, the third thing that we might say is better than 50-50 is that things could be choppy going forward. That expectation of the pivot has been like Charlie Brown trying to kick the football. Keeps getting pulled away at the last minute, and that gives us these pullbacks. So I think it's very likely we'll continue to see some of that volatility, and I don't think that that's a net negative for where gold prices are going. I actually think prices are going up, but clearly not in a straight line. So let's call it good there. Let us know if you're getting tired of hearing about all these dips, whether or not you're actually buying them. Let us know. And then while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.